Could we build a bot that trades the consumer staples sector profitably? Now, I did a video very recently talking about this gold bot trading idea, and it was based on one of the strategies that I'd seen here on quantifiedstrategies.com. But I've actually taken a look into this one over here, and it actually relates to trading boring consumer staples. And the reason I've taken a look into this strategy over here is because Jeff Kuznetsov from YouTube, and I'll put a link to his video over here, did a whole video showing you how to backtest this exact trading strategy. So I thought that's great because he did this video back in 2013, and I wondered, is it still profitable? And the reason for that is if you look at what's going on over here with the consumer staples sector, you can see how it was relatively flat all the way up until 2009, and then it just shot up and now it's gone flat again. That's the general trend over here. And I found that rather interesting, and I have no idea why it shot up since 2009 and never looked back since. I've really not done much research into it. All I want to know is, can I take this very simple strategy over here and make profit from it on a consistent basis with being able to just set and forget a bot? And so the strategy is very simple. It says, anyway, here is the strategy based on the ticker XLP. Yesterday must have been a down day of at least 0.25%. If XLP opens down more than 0.1% today, go long and exit on the close. So that's the rule for entering into a trade. And so you're going to want to enter into a trade if the trade meets that criteria. So I followed through Jeb's video over here, and I went into my own development platform here using Spider, which is what I use for machine learning. And I was able to import the libraries, etc., that I needed and actually test this out. So I'm going to import the data now instantly from Yahoo Finance. And I'm going to double click on that. And you can now see all this data is over here. And we're going to basically apply these rules that I just laid out over here to this data. And this is not a programming video, so I'm not going to take you through all the boring stuff, but I'm just going to check and make sure that's all gone through okay, which it has. And now I want to basically go and implement the strategy. So I'm actually going to do that by going down here and just changing some parameters. So let me just do that real quick. And that looks good. Cool. So now that I've implemented this, we can see that we get a Sharpe ratio of about 0.8767, which is really not very good at all. In fact, that's terrible. And when you look at the profit and loss chart, you can see how much money this would have made. It was very profitable up until 2012, and then it just went flat and dipped down. So that's really interesting because the cutoff really seems to be 2009 when this changes. And very interestingly, if I run some data up here, and I'll show you what this looks like, I can actually split the percentage change, etc., and how this would have looked between the close to close, the close to open, and the open to close. And you can see that all of the above really changed on 2009. So at 2009, this is really the year that just defined the strategy not really working as well so much anymore. In fact, it was actually the open to close that started to become very profitable, which makes sense because when you look at the price moving up, you would think that a lot of this would have been made up of, you know, the price opening lower than it closed. So in an uptrend, that's going to make a lot of sense. So that, you know, that just really talks about the trend and defines the trend. But if we come back here and we look at our profit and loss chart, I'm not really happy, you know, that this is a bot worth building. It really isn't, because it's been flat since, what is that, 2012. It's just been flat. And when I look at 2012 here, I don't know what happened, but the strategy just became less effective. And a part of me thinks that could be because it's just become more volatile. Like if you look at how fast the price moves compared to before, it just looks to be more volatile. Now, one of the cool things we can do here with machine learning and backtesting is I can now just change parameters. So instead of saying that it had to be down yesterday 0.25%, I'm actually going to get rid of that. And I'm also going to get rid of this negative here as well on the 0.1% threshold. Now I'm actually going to just make that a positive number. And when I do that and I run it, I can actually see that this would have been profitable. So the Sharpe ratio is 1.27. And in fact, in recent years, it hasn't gone up, but it hasn't gone down. It's actually been flat. So this is the cool thing about backtesting. This is where you can just come up with a strategy and just deploy it. For example, let's apply this to gold, GLD, and see what would have happened with that strategy. So I'm just going to reset everything over here. And I'm going to import all of this stuff again. And I'm going to come down here and trade the same strategy on gold. And you can see that the profit and loss just differs wildly. It just goes absolutely berserk. And the Sharpe ratio is 0.16, which is absolutely atrocious. So this is not a good strategy to apply to gold. Well, what about Google? Let's just keep going, see what happens. And we do that again. We import all of this. Now I'm just kind of messing around and having fun, by the way, but we might as well. Let's see it through and see what happens. Absolutely all over the place. In fact, it's got a negative Sharpe ratio, which is just the worst. So this really does work. I mean, if we think about it back for XLP again, this strategy really does work for XLP, which is quite astonishing, actually, that it still works. I mean, it's down, it's negative, you know, so it's not great in recent years, but nonetheless, it's a pretty profitable strategy going all the way up until 2012, 13, 14, 15, and then it just goes kind of flat whilst volatility's been really high. And so maybe that's the answer. Maybe when volatilities were really high, this isn't a great strategy to trade, but when volatility is low, maybe it's a great strategy to trade. Now, one of the things I should say is if you don't know what the Sharpe ratio is, then just put this in the comments. SHARPE. Sharpe ratio. And just put this in the comments and I will make sure I do a whole video on p-values, Sharpe ratio, all of that stuff, because it's all very important when it comes to backtesting. And thank you, Sylvan, by the way, for the very useful email you sent me on HFT, on trading, on all of that stuff. I found it fascinating. So I'm looking forward to doing some videos from the community on that. Nonetheless, I wanted to just show you guys this strategy, actually applying it, how to backtest, etc. If any of you are into machine learning and you want me to do some tutorials on how all of this works, then just let me know in the comments. Until then, take care and talk soon.